Welcome to NASDAQ Trade Talks. I'm Jill Malantrino, global markets reporter at NASDAQ. One of the side effects of the pandemic over the last 2 years are people changing jobs and seeing their spending change. And advisors have many new clients coming to them and saying they're experiencing financial, marital infidelity. Joining us to discuss is Chris Englebert. He's the founding partner and chief investment officer of Englebert Financial Advisers. Chris, you always deliver great topics, but this one sounds especially interesting. Explain to us what financial marital infidelity is and what you're hearing from clients.
Yeah, Jill, thanks for having me on again. I appreciate it. It's really a serious topic that we're seeing more and more. And again, probably accelerated from the pandemic and, people changing jobs and, having to move 401ks, et cetera. But really, years ago, people used to commingle their accounts when they got married, not so much so the last 5, 10, 15 years. So I'm not really trying to focus on the fact that, spouses have their own individual accounts. What I'm really trying to focus on is the spending patterns, the saving patterns, and really what's going on within the marriage. I'm not going to get obviously, into the topic of, being a marriage counselor, but one of the things that we're seeing is it's kind of heartbreaking because we're seeing this, marital financial infidelity. We're seeing secret bank accounts, credit cards that are unaccounted for, secret investment accounts. And one of the things, and really why it's kind of happened is because of the age of technology. So it used to be custodians, would send, statements out to everybody, but now you can click and get your credit card statements online, your, bank statements online. And that's kind of creating a problem because, believe it or not, you can hide that information from your spouse because it only gets sent to probably their email and no other email. So,
well, Chris, it sounds problematic for a number of issues. Obviously, you have the emotional side of it, but I can't see a happy ending to this. Let's say you go for a mortgage or you refinance or you need to access lending because an emergency comes up. It's all going to come out in the wash. If you go and get divorced, there's such a thing called forensic accounting. It's all going to be found out. I would imagine it's very rare where you hear the stories. Oh, hey, honey, I saved up $1 million. Yeah, I want to surprise you. I doubt you've ever heard a story like that. It just can't end well.
No, it doesn't end well. And in fact, it really has some, unfortunate ramifications for the family because, number one, the biggest thing I see is that, I see that, the spouses aren't talking to each other. So people aren't putting enough money in their retirement accounts, their 401ks, 457s, 403bs. The other spouse doesn't know this. So when they go to do their taxes, all of a sudden they're like, wow, we're paying a lot in taxes. And they can't figure out why. Well, it's because one spouse isn't contributing at all to a retirement account, but you're dead on about, where a lot of this comes out is we've seen a big refi boom lately. And when you go to have your mortgage refinance, they show your credit score and they show all the outstanding balances and credit cards. So you can't really hide this thing. You can't hide the secret credit card and it comes out and it can be very devastating to the family.
Yeah, whether you're refining or buying a house, if you get a car loan or a personal loan, it's all going to come out. And chances are you're going to get, another car over the next 10, 20, 30 years. Anyway, let's move on from that. What can advisors do for clients that are experiencing financial marital infidelity?
Well, the first thing is, like you said about forensic accounting, I always tell the spouses, start with the tax return. So what we end up doing is they bring in the last 2 tax returns. And sometimes we get spouses where like, hey, my husband and wife or, other spouse handles, the taxes. I just sign it at the bottom and away we go. I'm like, you can't do that because what ends up happening is every account except retirement accounts produces a 1099. So all of a sudden you can see an investment account or a bank account and you're like, hey, where did this interest come from? Where is this account and what do we have doing it? So we start out with the tax returns and we look through that. And we really try to dig in and we say, the other thing you do is, apply for your credit score and see what are open credit cards that you have. It's really, again, protecting the family's financial future too. And so we do a write-up and we talk about some of the steps that, the individual can take to protect themselves and the family. But again, we try to present it in a positive way because many times, married couples have a different philosophy on, money. One's a spender, one's a saver. But really, what you find out is if you pick the right spouse from a financial standpoint, and you work together, you can really create positive net worth and wealth, but you got to be open, you got to be transparent, you got to be talking about this stuff.
Right, which is generally a good philosophy for any partnership in marriage. It's easier than putting it into words versus practice, but you're spot on, Chris. And by the way, it is our 5-year anniversary this month for you and I doing trade talks together. And of those 5 years, I don't think we've ever done a segment where we haven't spoken about transparency and having hard conversations, especially when you're thinking about estate planning and how do you settle accounts? Where are the bodies buried when it comes to what are our debts? Where's our retirement money? Because in many cases, especially older couples, one or the other spouse is unaware of all these things. So, you and I have kind of always covered this transparency topic.
Yeah, and it's very important. And so what I say to, spouses, because, we've seen situations where the husband's the one, saving with the big 401k, while the wife's the stay-at-home mom or whatever the case may be. You've got to know what's in these retirement accounts. I mean, again, online access and technology is a big thing, but you should be showing your spouse, hey, honey, here's what we have in the retirement accounts. Here's where the money is. Here's what we're doing with it. Here's what we're trying to save for as far as our future goes. And, granting access to somebody else or giving the log on, is sometimes what you need to do, but you also need to do it from a practical standpoint, because if something happens to the person, how's the other person going to pay bills, transfer money, or really, create a good financial, future for the family?
Yeah, agreed 100%. All right, let's talk about the technicals here. Monthly review, and we'll kick it off with the S&P 500. Of course, July was a breath of fresh air, especially for the equity market.
Yeah, huge rally. I mean, it's like June never happened, which, we're thankful for, because June was really, obviously very trying, very emotional market with a sharp sell-off in June. A lot of headline news out there. A lot of people forget there was a couple of big crypto funds that blew up. We think there was a lot of people selling first, asking questions later. And we were trying to keep people, from getting into such an emotional state that they just said, no more, I got to get out. Because I was saying to clients, you could have a 5 to 10% rally at any time. Sure enough, we've seen, the S&P 500 light off. We've had some good earnings reports. We're into a good earnings season. And I don't think we're done with this rally. I would not be surprised to see some backing and filling after such a sharp rally that we've had so far. But so far, the trend is higher. And we've been telling clients that the markets were pricing in a moderate to severe recession. As we record this today, we got a jobs number for August, which was a boomer. And we think that bodes well long run for the U.S. economy.
And of course, NASDAQ 100 had a fantastic month as well in July, certainly propped up by some decent earnings.
Yeah, and again, big tech stocks, reported some very good earnings. Again, it was not all lost. And we show here, how the NASDAQ took off again. I mean, everybody keeps saying large cap growth, i.e. tech, is dead, but it's not. Those companies are still earning billions of dollars out there, and they proved it in the second quarter. And again, we think they're going to prove it through the end of the year too.
And let's talk about the Russell. I mean, we haven't heard, it had some movement as well, but it hasn't been in the headlines as much as large cap tech and energy and finance.
Yeah, the Russell is sneaking up on everybody. Now, again, this is my favorite asset class. We made this call back last December. We thought small mid-cap stocks were going to be the place to be. They've had a rough year like everybody else. But in the month of July, you've seen small mid-cap stocks start to outperform. We think the trend continues because many of these companies, and again, we've done this theme on other videos where we're talking about how we're going back to the 80s, where you had high inflation, high energy prices, and high interest rates. Well, one of the best asset classes in the 80s was small mid-cap stocks with a lot of takeovers. Well, guess what? Especially in the biotech area here the last couple of weeks, we've seen some big takeovers, and we think that's going to continue. So we still are a big believer in the small mid-cap area, and we think 2022, you're going to look back and say that was the time to be in small mid-cap stocks.
Yep, and to the relief of many drivers out there, oil has come back in as well.
Yeah, oil's, we made this call early on. We thought $120 oil was too high. I still believe oil has more to go on the downside. We've had a sharp sell-off. Would not be surprised to see an attempt back over 100. But again, drivers are going to see a big relief. You're going to see what they call under a four handle, or $4 a gallon on gasoline. In some places in the Midwest, it's already $3.65, $3.75 a gallon. I would not be surprised by the end of driving season, we're back into the mid threes on gasoline. Oil started out the year right around $75 a barrel. Oil could easily round trip this year and get back to $75 a barrel. I mean, it's been a fantastic commodity asset class, but again, we thought that there was way too much production out there. We thought there was $25 to $30 war premium in oil. And, again, we've had a lot of headline news about what's going on around the globe, but we still believe the trend is lower for oil. In the short term, could have a little backup or spike, but longer term, we do think it's lower.
Yeah. And Chris, I believe there are some reports that there are some gas stations showing a high 3 handle in parts of the country. So it is encouraging to see. Finally, let's wrap up with the bond, the fixed income market. That's pretty interesting as well.
Yeah. So, we've had a huge rally in the bond market. The 10-year treasury hit 3.5%. Back in June, everybody was concerned about, these high inflation numbers. You're still going to see some high inflation numbers reported in August and probably September, because the inputs into the inflation numbers are lagging, housing, energy prices, commodity prices. But the fact that commodities have rolled over as much as they have, and so has energy, you're going to see the inflation numbers come down. Now, the question is the 10-year telling us we're going into a recession? Well, obviously not after some of these strong job reports, but we think that after the worst start to the bond market, literally ever, that you're beginning to see people come back into the bond market, because if they're not, ready to be into the stock market, the bond market is offering some relative, good investment options. Obviously, short-term funds are beginning to yield over 2.5%, 3%. So there are other alternatives. And we think that, investors are starting to take advantage of those, especially in the muni or tax-free market. That looks extremely attractive right now, especially through the end of the year. But again, I can make the case that interest rates, after a big move up and now a pretty big move down, may not do too much between now and the end of the year until we see the other inflation numbers out there and what the Fed's going to do.
All right, Chris, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.